Hey, good morning, everybody. This is Jason. Hope you guys are having a wonderful Wednesday so far. So, before I get into the account and where we're at and what we've done this morning, I wanted to respond pretty quickly. It might end up being a rant to Matt's email as to why do I buy Tesla shares when I'm making so much more money selling put credit spreads. Well, this all comes into a couple things. So, money management is the one thing, and de-risking our positions. So with options, hopefully everybody knows, and if you don't know, I'm telling you now, options trading is extremely risky. You can, with selling put credit spreads, you will risk 100% of your collateral. So there is a chance that you lose every bit of that collateral, and the only thing that you have to keep is the premium. So if for some crazy reason Tesla happened to drop down to $400 or $500 or something on all these put credit spreads, that's all money lost. You know, I trade on the side I feel confident on and far enough out of the money to where I'm confident. I do make some riskier ones every now and again, and there's a lot of risky plays that I make with small amounts of money. But at the end of the day, you're going through all of this. And last Thursday and Friday, how were you feeling? How was everybody feeling when the market was just down and you're going negative? And look at all that. I think my account was down 40 grand or something between Thursday and Friday. Given we're back up, that was my expectations, and it's kind of how the strategy should play out. But there's potential of loss there. So Tesla, the reason I put the majority of my money in that company, it's a company I believe in. I want to own. I want to be a part of their mission, and so I'm proud to own a part of that company. I own AT&T stock, not so much pride in that. But I want to own companies that I totally believe in. And this is so key. You need to take money that you profit. You've gone through the stress, you've gone through the headache, you've risked your money, and you need to take it out. You need to put it somewhere safe, at least 10% minimum. You can see yesterday I withdrew 4 grand, and the 2,500, and we could open that up, and I just withdraw. Um, part of that money, of course, is going to go to Uncle Sam, but I also get to spend some of it. So, and having $4,000 in your hand, cash, it's a lot different feeling than when we see our account, which is just looks like a number going up and down. I mean, Robinhood, it's kind of changed this to a game. Thankfully, we're winning the game, but nevertheless, it's a lot easier to stomach a $4,000 loss in my account. I mean, I could be down $4,000 this morning, no big deal. But if I had $4,000 cash in my hand and I lose that, it's just emotionally even more difficult. Um, so I want to make sure that I own something at the end of the day. I don't want to have every dollar at risk. I have um, I have shares of AT&T that I look at, just it's pretty much just money on the side, and I might as well put it there and get 7% dividends on it, instead of just having it in the account as buying power, and then I eventually take that and just put that at risk to make more money. And at this account size, I have plenty of money to play with. This is a lot. I also take money out and I put it in other accounts that just have long-term holdings that I'm not going to sell. If you're not a very active trader, and you're just making a few plays a week, if you have not opened up an LLC and got trader tax status, you're going to be taxed at a high rate. So owning the shares, if I chose to, a year not just a year, but it has to be like 366 days, I can sell it and at a much less tax rate. So there is that. Or I hold it until I'm retired and I can cash it out then instead of at today's income rates. So yeah, $4,000 I pulled out, 25. So I constantly pull this out. You guys need to pay yourself. Pay yourself for your stress and the money that you're putting at risk. It is super important. So take a look at the account. Hey, almost exactly on the nose, right? We're down $4,000. When I look at the account, no big deal. We did, I think when Tesla, let's take a look at, so down to 860. I did open up, I think 6 more spreads right around, I think this initial dips are right around 862. If it continues to drop a little bit more, I'll go ahead and open some more, grab some more cash. But, let's, just for context on that too, let's look at my AT&T shares. So this would be another one. Why in the world would you buy AT&T when you could sell put credit spreads, right? Well, my total return shows I've lost $3 on holding these shares. However, does it show my dividend payout? It doesn't show my dividend payout. Anyways, it's 7% a year, so every single 3 months I'm getting $100 and some. So which on AT&T you get about 7% a year, and that is much better than any savings account out there. So I choose to stick some money in there. This is $7,000 that I haven't made any money on. If I were to put credit spreads with that $7,000, would I have made a lot more? Yes, I would have made a lot more. And Coca-Cola is kind of along those lines. I have a couple hundred shares. I have the dividends reinvested. I've made $500 on that $10,000. If I had $10,000 and I took it and used it for put credit spreads, yep, would have made a lot more, a lot. But this I can sit there and hold. If everything else goes down, at the end of the day, I still have this money just chilling. It kind of provides a little bit of stability in the account, provides some dividends. I could transfer this stuff out, and it could just be something that provides a little bit of income over time. So as far as what I'm looking for today, I don't know that I'm going to be making too many plays. I have a super swamp day. But I look forward to hopefully you guys joining me on Saturday for the live stream. I'm going to go over this a little bit more and some of the reasons behind my concepts. If you guys have never checked it out, I think I've only mentioned it once. One of my favorite books. It is not directly about stocks and options, but it is about money management, building wealth, and it's very, very practical. It's called The Richest Man in Babylon. Great book. Saturday I'll probably pick it up and maybe read a little bit out of there. But it goes into really making sure you pay yourself first. Take 10% of everything that you make and make it work for you. So anyways, I gotta get going, guys. Hope you have a wonderful day. Hopefully we see, hey, there we go. We're kind of, I know I've said it a few times. When I see it go down, that's fantastic. But that's great. Gives us more opportunity. We can grab more premium on some put credit spreads. We can sell the 700s, 695s, just about anywhere we want, somewhere in there. Still $150 out of the money. Gain some great premium and wait for it to either trade sideways or go up. And last thing I'll mention, I do have a recurring investment in Tesla. I'll buy $200 every single day until this account is moved. So, all right, guys, I hope you have a great day, and let's make a lot of money.